Welcome to CFE's virtual annual meeting. I'd like to take just a couple minutes here to maybe cover the outline of today's meeting. We appreciate everybody's time here today, joining us in a very different manner than what we normally have for our annual meeting. Instead of having about 300 plus people in a room, we get to enjoy taking the time to talk about CFE, our fiscal year end results, and talk about some of the very important things at the cooperative. We're doing it virtually this year, not because we really wanted to, but because of the times that we have to. Today, we're going to do our best to give you a report of our fiscal year end performance for fiscal year end August 31st, 2020. With me today, I have Todd Netton, our CFO, Dave Van Hollen, our board president, and Jeff Ernst, our board secretary, and of course, I'm Rob Jacobs, the CEO for CFE. We will do our best to explain and go through the information we have in front of us today. If you have questions during the presentation today, please, there's a chat area on screen that you can send in questions, and we will answer those at the end of the meeting. And we want to make sure we try and answer people's questions the best we can, make this as informative as we can, and we'll go through it. But you'll see some small changes from where we usually, we approve minutes and we approve financials. Because of the format, we're not technically able to do that today, but at the same time, we're going to get to those and cover them nonetheless. So again, welcome. And with that, I will turn the meeting over to Dave Van Hollen and have him call the meeting to order.
So at this time, I'll call the meeting to order, and our secretary will read the minutes.
On December 12, 2019, the 120th annual meeting of Cooperative Farmers Elevator was held at Sheldon Crossroads Center. Dave Van Hollen opened the meeting at 7 p.m. Joe Nillis led the invocation. The minutes from the 2018 annual report were read. There was a motion and a second to approve the minutes as presented. The motion passed. Rob Jacobs gave the nominating committee report. Dave Van Hollen gave the president's report. He touched on the financials. He recognized the employees' part in cutting expenses in a tough year. He talked about the patronage and Section 199 pass-through given for doing business with CFE. Todd Netton gave the financial report. The board of directors approved a qualified cash patronage of $1 million and a non-qualified patronage of $1 million. Also approved was a Section 199 pass-through of $5.7 million. There was a motion and second to approve the financials as presented. The motion passed. Rob Jacobs gave the manager's report. He thanked everyone in attendance for coming out and their patronage. He talked about the changes that are happening at the farm level, the local co-op level, the regional level, and the national level. He talked about the challenges the weather has caused this year. He talked about the past year's financial results. He talked about how CFE gives back to our communities. He thanked the employees for their hard work. There was no new or old business. The election results, Justin Groneweg, Mark Bramer, and Kenneth Peters were elected to 4-year terms. There was a motion and a second to adjourn. The motion passed.
Okay, thank you, Jeff. I guess it's time for my report. So I bring you greetings from your board of directors. This truly has been a different and difficult year for most of the country. Your co-op encountered situations never experienced before, as you, our customers, experienced as well. Ethanol plants shutting down and not taking corn that CFE had sold to them. Packers not slaughtering cattle or hogs or in a limited capacity. Euthanizing of animals, feed rations to limit growth, or shortages of feed ingredients. But through it all, your co-op still increased sales by $60 million to almost $500 million in sales in 2020. We as a board have seen the loyalty of our patrons and employees in working together to get a crop planted, animals fed, even with disruptions because of sickness due to COVID. Even with all this turmoil, all the divisions of CFE performed well in 2020. This year, your board of directors has decided to pay dividends of $2 million all in cash for 2020 and have paid local deferred equity to 2009. CFE has also elected to pass $8.38 million in Section 199A to its members, with this amounting to 18.45 cents per bushel of grain marketed through CFE. Quite a bonus for doing business with your co-op. Looking to the future, we continue to invest in facilities and equipment to better serve you. As many of you have heard, we are building a new facility at George, very similar to what was done at Hudson a few years ago as far as storage is concerned. With 1.8 million bushels of storage being built, a new office, scales in and out, and other amenities that will complete the project being built a mile south of George. We also continue to explore other opportunities to grow. We as a board will do our best to strategically invest in CFE, which will bring you the best returns and service to you, our valued patrons. Your board of directors would like to thank all of CFE's employees for a job well done, even through adversity, and our patrons for your business. Without either, we couldn't succeed. We wish you all a happy and prosperous and more normal 2021. And again, thank you for your business. Todd, will you give us the financial report at this time?
Right, thanks, Dave. I'll be reviewing the financials as presented here, and we'll go through some of the numbers here in the slideshow. And the financials were audited again this year by Gardner & Company, and they gave us an unqualified opinion, which essentially states that the numbers that are shown here in the report are in line with generally accepted accounting principles, and they gave a clean opinion on those financials. Before I get too far into the numbers, Dave alluded to some of the challenges this fiscal year that we had with COVID and a number of disruptions going on, and we recognize the cost of those in our financials, but we do not have any of the benefits that different government programs offered this year that we applied for, but have not yet received in full on those yet. So that being said, I'll go into the financials here for this year. I'll start with the statements of savings. Our sales year over year were about 14% higher this year compared to last, at about $488 million. Going down to gross savings, we're $45 million this year versus $42.5 million in the year prior. That's about a 6% increase. And those are dollar figures that are presented there. Rob will allude more towards the units year over year and how those performed individually. On the operating revenue side, we were at $25.5 million this year versus $22.8 million the year before. It's about a 12% increase. The big drivers there would be drying revenue, which was up $2.1 million for a total of $4.1 million this year. Our feed grind and mix was up about $284,000 to $10.6 million in total. And the application income was about flat year over year, and that was at about $4.3 million. Going down to the operating expenses side, our personnel costs were about $32.8 million of our total there. That was an increase of about $2.5 million over last year, or 9%. A big driver of that was our hours increasing year over year due to the additional work that we took on, and our hours increased year over year 23%. On the fixed expenses side, depreciation continued to grow, with that expense being up $1.2 million as we saw an increase in capital projects and the additional investment in fixed assets. That drives depreciation expense up to about $10.6 million this year. And then interest expense was down about $1.1 million with lower rates and also lower grain carry this year compared to the last year. On the other operating expenses side, repairs and maintenance was up about $600,000 or or 19%. Utilities and dryer fuel were up about $750,000, and technology expenses were up about $100,000 as we continue to look for new ways to invest in be innovative here at the co-op. Going down into the operating savings, what was produced from local operations this year was a little over $1.9 million compared to a little over $1 million the year before. Going down under the patronage dividend side, we had about $7.5 million this year compared to about $7 million last year. The big drivers there on that line item would be Land O'Lakes, CoBank, and AGP, all being up this year compared to last. AGP was the big increase there, about 46% increase this year versus 2019. CHS was the one that we saw a dip in this year, as a lot of other cooperatives did. As we go down into the investment loss, majority of that amount would be depreciation from our condos that we share investments in. And then we have income tax expense of about $267,000 this year, and going down to net savings of a little over $9 million. We also have a loss attributed to non-controlling interest, which again would be the depreciation portion of shared investments that we have in grain facilities that we own over 50%. They're attributed to some of our members. Bottom line this year is $9,078,000 compared to $7,351,000 the year before. As a percentage of sales, this year is about 1.9%, and last year was about 1.7%. Going to the next page on how the net savings were distributed. This year, there's a qualified cash dividend of $2 million, and then retained savings of $7 million. The retained savings this year, again, will be reinvested back in your co-op to allow us to continue to expand to meet your operational needs. Going over to the balance sheet side, I'll cover some of the more significant items. Trade receivables were $29.2 million compared to $36 million last year. Our trade receivables are something that we monitor and we really focus on risk management. We've done a lot of work on our end from all our employees to really reduce our risk there. Our past due accounts last year were about $5.75 million, and they're down to about $3.5 million this year. It's about a 40% decrease in a time that was really challenging this past year. So we're proud that we continue to manage the risks that we can control and continue to protect the equity of the co-op and the equity of our members. Going down into the inventories year over year, the big decline there is grain. Last year at this time, we were carrying a significant amount of grain with inventory dollars of a little over 40 million versus this year, our inventory grains were about $11 million. Going to the next page, property, plant, and equipment went from $110 million this year versus $105 million last year. This past year, the board approved reinvestments back into assets of about $15.7 million. Some of the significant items would include 8 new feed trucks and trailers to go with a lot of those, 12 new application equipment, and the Bigelow grain facility. Going down into the investments line item, the equity in other cooperatives grew again this year to $36.2 million versus just under $35 million the year before. That line item would represent the amount that we have invested in the regional partners that CFE works with, and we continue to value those relationships and work well with the regional cooperatives in that system and the benefits that they bring back to us. Going over to the liabilities side, the notes payable, capital leases, and the notes payable operating on the current portion there decreased significantly year over year. We did have a little bit of an increase in our long-term debt by about $4.4 million, but in total year over year, our debt is down $26.4 million. Other liabilities there include accounts payable trade payables of $14.2 million, unpaid grain of about $9.4 million, and our total current liabilities are $53.5 million this year compared to 91 the year before. Our accrued pension costs remain a significant item here on our balance sheet, but we were able to see that go down here year over year from 12.2 million the year before to 11.3 million this year. On the members' equity side, we alluded to some of this information here already, but the retained savings increased from 36.7 million to 43.7 million, and the total equity increased from 103 million to 110 million this year compared to last. That is all I have for the financial report, so now we'll go to Rob for the manager's report.
Thank you, Todd. Great job at explaining the financials, and Dave, kind of a recap of this last year of some of the challenges and opportunities that we saw as a company. It's a little different for me this year. I usually like to get up and walk around and talk to people in the crowd and talk about things that are affecting the cooperative, both short and long term. And so bear with me as I try and explain and talk about where we came this last fiscal year, 2019, 2020. I think as we all can agree, this last fiscal year, and even as we go forward into this year, it's been an extremely challenging time for your cooperative and agriculture and society in general. I can't honestly, it seems like I say this every year, honestly can't remember a time where we've had maybe more market risk, more challenging situations as a cooperative goes and as a business goes than what we experienced this last year. And if you would have told me a year ago today that we would have lived through all the things that we did and came out with the results that we did, I would have said, man, what an amazing job. I mean, as I look across the board from the job that our employees, our board of directors, and our farmers, our producers did in meeting the call and the needs each and every day, I think we should all be extremely proud. I try and tell people that a lot because we get so caught up in the day-to-day activities and the negatives that are going on in our life. And I think if there's ever a time that we need to really focus on some positives and where we've come from and where we're at today and where I feel we're going, I think it would be a good thing to think about. This last year, like no other, when I think it was March 13th, guys, we were at a board retreat in Sioux Falls, and we got the call that the country was basically shutting down. And we abruptly ended the meeting. We sent the board home, and our staff was there, so we teamed up and we kind of gathered together and said, now what next? And the truth is, we had no idea. We had no idea what was going to happen. We had no idea the challenges we were going to come upon. But we did know one thing: we needed to continue to service our customers, our communities, and our employees at a high level. And I think we did that. We weren't perfect. We did a lot of things that we wish we could rewind the clock and do over again, as we always do. But I think as you look at the job done across the trade territory and with our customers, and I look at some of the huge challenges we had in livestock. Dave, you alluded to the euthanization of animals, not being able to get them into the processors. Just feed rations, heavy weights. We had ethanol plants shutting down, calling force majeure overnight on us. We had millions of bushels sold into those markets that changed overnight. And when that happened, I think it was just by the resolve and quick response of the cooperative, and I think even more so, the diversity that your cooperative has in meeting those challenges really showed this last year. For instance, when ethanol did shut down and we had to redirect, and we looked like we were going to have this this huge crop coming at us because we were blessed with a good growing season. And we knew we had millions of bushels of unpriced, unsold grain on our plate because of the current situation. We're able to quickly reposition ourselves in the market to the rail. The rail market was not the market just a few short weeks earlier. And having that market access to move that grain quickly and efficiently in preparation for this year's harvest was incredibly important. People don't realize how quickly the industry responded to that in repositioning positions and inventories and risk. The risk that we involved this last year was like no other I've experienced. And we still have some of that risk in the marketplace. But I think as we repositioned risk, and it came at a cost, when we looked at the risk involved and we repositioned that, it cost the cooperative money. It cost our patrons money. It cost us gross margin and what we could have achieved, what we had sold. But nonetheless, we still repositioned because we knew that we couldn't afford to carry risk forward in the market of unknowns. And I think as you go through what we experienced last year, and maybe what we're going to experience already this year and in the years to come, risk management, risk diversity, and market access are incredibly important for our cooperative and for you, our producers. We talk about a lot in the boardroom. We talk a lot about having market access to all markets. We're a very strong feed company, but we still market over half our grain to processors, whether it's ethanol, whether it's to the rail, whether it's to the PNW, Mexico, California, Gulf. Those are all things that are very, very important for us and for our producers. And we're going to continue to work really, really hard to make sure we have that access to those markets, because you never know when you're going to need them. And I think that's incredibly important for you as our producers and for us as your cooperative. We worked really hard this last year. We dealt with illness at the company, just like a lot of you did in your own families or businesses that you might be in. And, we worked really hard to try and mitigate that risk as well. But at the same time, our employees still showed up every day. I just put it in a newsletter the other day, so some stuff to our employees that said, no matter what, we didn't quit. We showed up, we answered the bell, we got the feed delivered, we got the fertilizer spread, the crop sprayed, the grain delivered, the harvest done, and we just did what we do each and every day, and I'm proud of that. I'm proud of the job that our employees did. I'm proud of the job that our staff and management did. I'm proud of the board. I'm proud of you as our producers. We'll keep going forward. If you would have told me 9 months ago that we would have traded $13 cash corn today, I don't even know what cash bean $13 cash soybeans today, $4.80, 90-cent cash corn, you could have knocked me over with a feather. And here we are. We've got those markets. We've got some opportunities for our producers to hopefully make some money again. We need some traction in this livestock market to come. But it is a whole different world than it was just a few short months ago. And that's the world we live in. We just got done writing checks in excess of $70 million to our customers for deferred grain. $70 million. And we met those challenges. And we met the capital challenges that we have. We have large capital challenges, as many of you do as well. Man, what a totally different story that would have been just 9 months ago. And that just kind of shows us the world we're in today. Your company at CFE will continue to reinvest in growth for the company. We're up $60 million in sales this year. I always say dollars of sales don't mean a whole heck of a lot. And as you look at some of the things that we did year over year, our corn bushels that we marketed at about 39.5 million bushels versus 37 million the year prior. but still down from our years of 2018, 17, and 16 when we had a little bit better crops. Nonetheless, a pretty strong year in corn marketing sales. We're up just about 14 million bushels of marketed soybeans this last year, up significantly from 9 million bushels a year prior. Part of that would be because of better yields, and another part of it was we carried forward a pretty large percentage of our beans into fiscal 2020 with the idea because of the carries in the market, and we captured those carries and investments like we did at the Bigelow location to be able to do that and reinvesting in storage opportunities for us to capture those carries, be faster at what we do and more efficient, allowed us to see that, and we'll continue. At least we have that opportunity, and when the market allows us to do that. Feed tons sold this last year, just short of a million tons of complete feed out the door. That's been a kind of a goal that we've had, an unofficial goal, I guess you'd say, is in growth. If you look back 5 years ago, we're up about 25% in feed tons sold. 5 years, 730,000 ton, just a short of a million ton of complete feed. Every ton that goes out the door is soybeans that you grow or process, and corn that goes through our feed mills, and it's a captured market that we serve every single day. Agronomy, we had a nice strong year in agronomy tons sold. Just a little over 104,000 tons of fertilizer out the door. Again, in a year that a lot of unknowns, we had a nice strong agronomy season. We had probably a few more acres of corn on corn. We had a great spring, one of the springs that we desperately needed after all the challenges we've had the last few springs. Man, was it nice to get out there and get our work done timely, be able to be on your yards and your fields when you needed us. And it felt like we were working ahead instead of behind all the time. So just a really good, solid growth here in agronomy. Lumber sales. Lumber was a totally different year for us in lumber. We saw another continued growth in lumber sales by about $500,000. It came from different directions. Although our livestock building sales were still fairly strong, they were down from the year prior. We didn't build near as many livestock facilities, and as we should have. The market told us we shouldn't, and we didn't do it. But nonetheless, we still saw great growth in commercial and residential sales at all locations. The addition of Spirit Lake, yeah, it's been good, and it's served us well. But places like George and Ocean and Hartley still had very good years, saw growth at those locations, and they did an excellent job of serving the communities that we're in. And we look for that to continue. We definitely saw the increase in lumber building materials hit the marketplace. Incredible increases that continue yet today. And it will be a challenge this next year as far as maintaining the sales, excuse me, based on just that market. It needs to readjust so people can afford and want to build again. But lower interest rates have provided some of that building and growth, and then just doing the job. It's really helped us out. Todd, you talked about our savings before taxes. We had about $9.3 million of total savings year over year, and the growth that we saw in that. We had about 1.9 million, a little bit in net local savings. You alluded to the expenses associated with COVID-19, and they were real, and they were large, from impacts to wage, time away from work, to market conditions, whether it's in grain or livestock, and losses associated with that. We recognized every penny of that last fiscal year that we could, without seeing any of the dollars come to us that were provided through PPP programs that we applied for. We didn't get any of that. We did not recognize any of that in fiscal year end August 2020. So if they come this year, they'll come into this year's fiscal performance. But we took all the expense last year, and I thought it was appropriate, right thing to do. Our board is on board with that. Our auditor is on board with that. We want to be conservative in how we approach that. I think it's the only way to really do that. especially given all the moving parts and pieces associated with that. Yeah, we still saw growth. No, we didn't make our goals in local earnings. I'll be honest with you. We had larger goals than that in local earnings as a company, and we were tracking really well until the wheels fell off. But nonetheless, we still saw a really good fiscal overall earnings for the company. I want to remind people, when we look at our relationships and the people that we do business with, particularly our regional cooperatives, and I think I talked about this last year, we leverage those positions, those relationships with our regionals. And so you see our regional patronage income stronger than most. And I think that's for a reason. We pick our partners, we strategically work them to say in how we do business together. And I believe that is their job, to support the local cooperatives, our local members, because they own us. Our local members own us, and it should go all the way up to the regionals. We remind them of that. And as you should remind us as well. And we try very hard to bring back that value as a company. We're not perfect at it by any means, but we're trying to continue to leverage those relationships, get those returns back to CFE, greater percentage of those returns in cash. It used to be those returns would be back in 30, maybe 40%, 20, 30, 40% would be in cash. Of course, that's about your tax liability. Today, those are much higher with our main vendors, and that's for a reason. And so we're happy that we're able to work with those people and yet have the understanding they have a job to do and perform with us. But we really, really value our regional cooperatives and relationship. So as we look forward, $9.3 million of total earnings. Again, $2 million of that going back in all cash to our members. And we always talk about the things that we want to do is try and get all the cash we can back at limited tax liability. You get all the cash from your dividend. Yes, you are liable for the taxes on that, but you got 100% of it in cash. Can't complain about that. Plus, we returned about 18.5 cents per bushel on every bushel sold to CFE you can use this year on your tax as a deduction, on your taxes as a deduction. So I think that has great value for our producers and for CFE. As we look to the future, we have a lot of challenges and a lot of opportunities. We'll continue to reinvest in our facilities, continue to reinvest in our employees, continue to reinvest in everything that we do in our communities as best we can. That may or may not look the same or different than it has in the past. Dave, you alluded to our build out in George that we announced here about a month ago. And you know, we look back to the years prior of reinvestment in the company. And Todd, what was the number that took? It went 5 years. I don't even know if I want to say it, but it was
$94 million.
So $94 million your company is, your cooperatives reinvested in assets, whether it's fixed assets or rolling stock in 5 years. So that's quite an investment, a reinvestment in the company, reinvestment in your future, reinvestment in how we can service you. And as we do that, we know we have to fiscally perform. We know we have to put it in the right place for the right reason at the right time. And we're working really hard to make sure we balance that. We know that as you leverage a company, you have to have fiscal performance to offset the leverage, which I think we're doing. And at the same time, doing it in a manner that meets the long-term goals and the needs of our customers. It might not be every 6 miles, but it'll be in a place where people can use it and see the benefit of it for our customers and all of our customers. And hopefully we show that in each and everything that we do. And it's at different places at different times. We can't do it all at once. We prioritize projects, we talk about them at great length, and we look forward. We have others on the horizon as well. Those will be addressed as we can as a company. But in the situation of George, we looked at the long term of that facility, whether downtown in the heart of everything, without room for growth and expansion, noise, dust, traffic, safety, all those things came in the age that was there, condition of the facilities, and we decided to move that outside of town. And I think long-term, yeah, it's more expensive to do that, but long-term, accessing the facilities, speed and space really, really is important for us. And I think it'll be a great investment for our customers. We look to the future. We talk about the risk of how we do our business. I think we need to continue to manage that at a high level. Feel very good about our team, the job that Todd's done, our grain department, feed, agronomy, and managing risk and what that looks like. We know we have great capital needs as a company. We're definitely living that today as grain markets and inventory values continue to go higher each day. But I think the one thing that we also need to remember is our greatest capital piece, and that's our employees. Our employees, I can't tell them enough. I try and tell them as much as we can, and I appreciate when you do, how much we appreciate the job they do. I talked about it earlier, about they're just showing up each and every day to get the job done. They don't ask for much. They just want to make sure that they show up and deliver each day. Because that's the strong, I think, Midwestern values that we live with here in our world. But very proud of the time and commitment they give back to our communities. We have people in fire departments, EMTs, various community organizations, and they're always, willing and able to pitch in where they can, and we greatly appreciate that. And we know that they are by far and away our greatest asset. I also thank our employees' families. They put up a lot of things. I thank my family as well, but I think about time spent away from home, even probably amplified this last year with all the situations that are going on. And I just want to say thank you to them as well. Also, thanks to our board of directors. We have asked more of our board of directors this year than we ever have. Feel that they've done a really good job of helping lead the company, keeping us, kind of our focus and things grounded and steady, and it's really helped myself, Todd, other staff members. So thank you, gentlemen, and the rest of the board members. Very, very much appreciated. With that, we also want to thank you, our customer. Thank you for your business. Thank you for your patronage. Thank you for your friendship. And as we go forward, we look forward to serving you here. This year, we're off to a pretty solid start. We've got some good things going on. We definitely have challenges and risks in the marketplace, but feel CFE is well positioned to meet those challenges today and in the future.